One area that is mostly examined in professional examination is overheads. And are you interested in understanding overheads so well, so that you'll be able to solve a question when it comes in the examination? Then this particular video is for you. I hope you are excited. Let's look at what we are going to do in these particular tutorials. First of all, we are going to look at what is overheads. When we say overheads, what does it actually mean? Second, we are going to look at the two schools of thoughts for the treatment of overheads. Okay? Then third, we are going to look at reasons for using one of the school of thoughts, that is absorption costing. Next, we go into the absorption costing process, where we look at allocation, apportionment, and absorption. Finally, we will look at over and under absorption of overheads. I hope you are excited. Then stay glued to your chair and let's go through it. First of all, let's look at what is overheads. When we say overheads, or when you hear overheads, overheads is simply the total of indirect materials, the total of indirect material, indirect labor, and indirect expenses. When we say indirect, what do we actually mean? Before any product or service can be produced, there are costs that are incurred in the production process. For instance, let's take the Coca-Cola on the right. In the production of the Coca-Cola, there are costs that are direct and costs that are indirect. What are the direct costs? The direct costs are costs that are traceable directly to the product. For example, for this Coca-Cola, you see we have a can. Second, you see we have a red painting around the can. That is called the label. Okay, now the cost of the label and the cost of the can are direct because they are traceable directly to the product. That is the Coca-Cola. Again, if you look at the content of the Coca-Cola, the liquid in it, you can have something like sugar, you can have something like color, you can also have corn syrup, whatever they use, water, and the rest. Whatever they use in the production of the Coca-Cola liquid in the can, any cost associated with that is a direct cost because they are traceable to the Coca-Cola. What about the indirect cost? The indirect costs are costs that we cannot trace directly to the Coca-Cola, but they are incurred in the production of the Coca-Cola. And so these indirect costs, when we aggregate them or when we total them, we call them overheads. I hope you get the understanding. So the total of all the indirect materials that goes into the Coca-Cola production, all the indirect labor that goes into the Coca-Cola production, and all the indirect expenses that go into the Coca-Cola production is termed as overheads. Let me give you an example. Electricity. In the production of several products of Coca-Cola company, like Coca-Cola, Sprite, and the rest, Fanta, electricity is used. The electricity is used in the production of the varieties of Coca-Cola products. So all the products of Coca-Cola bottling company gain from electricity usage. So electricity can become an overhead, and that is an indirect expense. Now, components would like to categorize this kind of these overheads into the departments that incur them. So in this particular instance, we can have a production overheads, administrative overheads, and selling and distribution overheads. For selling and distribution overheads, you can have overheads such as marketing costs, selling and distribution costs, transport costs, under selling and distribution overheads. Administrative overheads can include the wages and salaries of administrative staff such as secretaries, accountants, designers, whatever. Then the real production overheads, we can have factory workers, etc. The salaries and wages of factory workers can be production overheads. I hope you get the understanding now. I hope you are excited. Okay, let's go to our next. The next thing we are looking at is the two schools of thoughts for the treatment of overheads. Now, there are two schools of thoughts when it comes to the treatment of overheads of an organization. The first is called marginal costing, and the second is absorption costing. We will look at marginal costing later because it's a whole topic on its own. But our focus now is on absorption costing. Now, absorption costing says that we should include in the total cost of a product an appropriate share of the organization's total overheads. What does this mean? When you take an organization's product and you quote a price, you quote a cost for it, the cost should be inclusive of a fair share of all the indirect cost that goes into the production of that product. So, for instance, when we go into our picture, the Coca-Cola, what this absorption costing is saying that all indirect costs that were incurred in the production of the Coca-Cola, we should share or give a fair share of that indirect cost to the Coca-Cola. That is the school of thought of absorption costing. But marginal costing, on the other hand, says that we should treat an organization's total overhead as period costs and charge as an expense against the period in which they are incurred. What does it mean? It means that when we total all the indirect costs, we shouldn't give a fair share to any product or a service, but we should sum all of them up and deduct from the total revenue that we derive from the sale of a particular product. This area is a whole area on its own, and I shall be treating it later. Now let's look at why should we use absorption costing. Reasons for using absorption costing. Why is it important to use absorption costing? Now, there are three main reasons, and you should be able to understand and explain these reasons because it can come in your examination. First is inventory valuation. Here we are looking at two things, your closing stock and the cost of sales. The explanation is simple. When you take any financial statement of an organization, under the current assets section, you have a closing stock. Now, the closing stock, you should have a figure in the financial statements. That figure associated with the closing stock looks at the valuation of that closing stock. Now, in valuing a closing stock, we should look at all the cost that goes into the production of that stock, or all the cost that is associated in bringing the stock into its current state. So, if we exclude any cost that is associated with the production of that closing stock, then we have not fairly represented the cost on the statement on the financial statement. So in accounting, all costs associated with the production of a particular stock or inventory should be inclusive in the valuation of that stock or inventory, so that we can have a fair representation of the stock on the financial statement. Then we look at cost of sales. When we look at cost of sales, in a financial or income statement, you look at your sales figure, you deduct your cost of sales, you get your gross profit. Your cost of sales are the cost associated in producing the inventory, which is inclusive of all costs associated in the sale of that inventory to get your revenue. So if we are valuing our cost of sales, it must be inclusive of all the costs, the full costs that were incurred in the production of that inventory. Second, we look at pricing decisions. Now, let's look at this particular area very well. You should pay very close attention. When we look at a product, before any company can sell a particular product or a service, they need to have a particular price for that product. So in our earlier example, when you go into any shop to buy a Coca-Cola, you have the price attached, let's say $1 or $2. Okay, now the price $2 is a sum of the costs plus the margin. Okay, so before companies can ascertain the price by which they can sell their product, they need to total all the costs and add their percentage margin in order to get the price. If at the point in time we want to get a proper understanding of the full cost of the product, then we need to sum all the costs associated with that product, both direct and indirect, and add our profit margin to make our pricing decisions. I hope you get the understanding. Then the next reason for using absorption is establishing the profitability of different products. Now this is quite contentious, but pay attention and let me explain to you. Now when a company produces different kind of products, for example, Coca-Cola bottling company, they produce Coca-Cola, Fanta, Sprite, and the rest. Now, if they want to identify the profitability of each of these products, they need to have a fair share of all the overheads incurred in the production of the different varieties of products, so that they can aggregate their costs and subtract from their revenue that were generated for each of these products to ascertain or identify which of these products are doing so well and which are not doing well. So when Coca-Cola puts their three products like Coca-Cola, Fanta, or Sprite on a table, they can actually identify that maybe Sprite is doing better than Coca-Cola, or Coca-Cola is doing better but their cost is increasing. So they can make profitable decisions based on their cost structure and their margins. I hope you get this particular understanding of the reasons for using overheads, absorption costing very well. Now let's go to our absorption costing stages. There are three main stages for absorption costing. The first is called allocation. The second is apportionment, and the last is overhead absorption or recovery. Let's take the allocation. Now when we say you are allocating an overhead, we are simply saying that you are identifying an overhead to a specific cost unit, cost center, or department. So when we take the costs, you say that this cost is for this particular department, or this particular department achieved this cost. Okay, so the cost is traceable to a particular department. That means that that department incurred that cost unit incurred that cost center incurred that cost. And so we can say marketing department, this cost of advertising of $1 million, you people incurred it, so it's allocated to you. Then apportionment. Apportionment is saying that, okay, there are certain costs that we cannot say it was incurred by this department or that department. So we need to share all those costs for all the departments or the cost units or the cost centers that benefited from that cost. So we are sharing apportionment. Then overheads recovery or overheads absorption simply means overheads are added to the costs of the cost center or cost units. So let's take it for instance, we produce these 3 products in a Coca-Cola bottling company. Coca-Cola, Fanta, Sprite. Now Fanta, Sprite, Coca-Cola at the end of the day must have their fair share of all the overheads of that particular company. So when we are recovering overheads or when we are calculating the overheads absorption rate, we are simply saying that let's every product or service or cost unit or cost center benefit from their fair share of all the overheads that we incurred. I hope you get the understanding. If you don't get the understanding, we are going to solve a particular question for you to get a proper understanding. Now let's look at the basis of apportionment. Okay, so when we want to apportion overheads between different cost centers and cost units, we use a basis of apportionment, a fair basis of apportionment. And note, here, an organization can choose an arbitrary rate of apportionment or they are choosing arbitrarily. What this means is that every company can choose its own way of sharing its overheads, depending on what they think is appropriate. So it is not a rigid system where an organization would like to choose what's stated over here. They have the right to choose whichever they think is appropriate in representing that overhead. But generally, we have these kinds of basis of apportionment as the generally accepted rate. However, you should be mindful of the fact that in exams they can give you a different rate or basis of apportionment in the question. So you should read the question over here. So first of all, let's look at rent, rates, and taxes. And the basis of apportionment is area occupied or floor space. So we can go through all the list: insurance of stock, value of stock, insurance of other fixed assets, value of fixed assets, and so on to power, which is the kilowatt times the working hours or the horsepower of the machine. So this is a continuation of the overheads and the basis of apportionment. Now let's look at the reapportionment of overheads or the secondary distribution of overheads. Now you should pay very good attention to what I'm going to explain. There may be several departments in an organization. We can have production department and a service department. So in the example of Coca-Cola, let me go back. In the example of Coca-Cola, as a company, they can have a maintenance department. That maintenance department provides services to every plant that is used in the production of, say, Coke, Fanta, or Sprite. So the cost that will be incurred by the maintenance department is for all the products that are produced. There can also be a canteen where all the workers who work in Coca-Cola bottling companies eat. And so the cost that is incurred in the canteen department is for all the workers. And so that canteen is a service center that is providing service to all the production workers in the organization. So any cost that is incurred in the service center needs to be shared for the production sector, and that is what is called secondary redistribution or reapportionment of overheads. And mostly this time the service department is apportioned to the production department. Now, what basis can they use in the apportionment of such service department costs? Now, let's look at quality, number of inspections done. So if you look at the number of inspections that were done by the quality inspectors, then we can apportion the costs of the service department, that's the quality department, for the production department. So for example, if production department A had 15 inspections in a year, and production department B had 20 inspections in a year, then we can use the 15 inspections and the 20 inspections as the basis to share the quality costs for the production department. Then the maintenance department, the stores department, the canteen or welfare that I explained earlier, the internal transport, payroll office, pictures office, all these are service department to the production department. And so their costs, we can use the basis on the right to share their costs for the production department. I hope you get the understanding. Let's move on to our last. Now, this is called, the last part is the overheads absorption or the overheads recovery rate. Now, I explained here to you that, the overheads recovery rate, we are adding to the cost per unit of a product or cost center, cost unit or department to ascertain their full cost. So when we take, say, a product, let me use this one as an example, the Coca-Cola. If we say the full cost per unit of Coca-Cola is $1.20, okay? The full cost of $1.20 is inclusive of the direct labor, direct costs, indirect cost, which is overheads, and the indirect cost, which is the overheads, is calculated on a per unit basis. So if we want to find the full cost, then the indirect cost, which is the overheads per unit, must be calculated. And how do we calculate it? How do we calculate the per unit overheads recovery rate? In order to calculate the per unit overheads recovery rate, we have to look at the total budgeted overheads for a particular cost unit, cost center or department, and divide it by the total recovery base. So what is the recovery base? Now, the formula on the right, which is the OAR, overheads absorption rate. Now, the total recovery rate base is what is on the left. There are several methods that an organization can use. First, an organization can use production units method. How many units were actually produced, the volume of output. So Coca-Cola will produce 60 million units. Sprite will produce 4 million units. And for Fanta, we produce 10 million units. So in total, we produce 30 million units of Coca-Cola, Fanta, and Sprite. And so that would be the recovery base that will be used. Percentage of value of raw materials. So when we look at the value of all the raw materials that we bought, we use a percentage of that as the base. Then percentage of direct labor cost, or the total direct labor cost. Okay? So here, we will calculate, we will look at all the total costs associated with all the products that we produced. Then we use it as the recovery base, or we use a percentage of the total of the labor cost as the recovery base. Labor hour rate method. So here, if we have the total of all the labor hours, then we can use that as the total recovery base. The last one is the machine hour rate. So I have to state that any organization can choose any of these methods which they think is appropriate. And so the recovery base is also selected arbitrarily. So you should be very careful when reading the question, so that we identify what is the recovery base. The last point that we should pay very close attention, because this is one area that tricks students. The method depends on the production process in operation. So in a question, they can determine that, okay, this organization is a labor intensive, they use a lot of labor. And so the appropriate one would be labor hour rate method. You should pay attention when they use certain words in the questions. Oh, okay, this organization is labor intensive. They are trying to tell you that the appropriate base is labor hours that is used. However, if the organization is machine based or machine intensive, then the machine hour rate is the appropriate method.